Hello, good morning everyone. Everyone must be in a good mood. Ready for some boring stuff? Okay, the warm-up music and the performance made me completely forgot all my script. So where should we start? Self-introduction. My name is Toya Zhang. I'm the Chief Marketing Officer of BIT. BIT is a full-suite crypto exchange focused on derivatives trading, especially crypto options trading. Let me highlight the fact that compared to hundreds of crypto exchanges that you may be aware of, and maybe over 50 that offers perpetual futures trading, there is only a handful of exchanges that can offer options trading with proper risk management and margin model. If I'm not calculating wrong, probably in this industry we have 5. So it's really, really hard to set up a crypto options exchange, and that's actually one of my points of how old money entered the crypto game. So throughout the industry, my years of industry, 7 years, there are 2 topics that I have been asked to talk about the most. One is, when is the mass adoption? When? We have been talking about for so long. And the second question is, when is the institutional money coming in? So we have been playing, having carnivals, but it seems like the big boys are not participating in us. I landed yesterday in Istanbul. It's actually my first time, quite excited. Before that, I was in Dubai FinTech Week and also Abu Dhabi Annual Investment Summit, when investors from the world coming into Abu Dhabi and starting to discuss, hey, where should we invest, right? And in that summit, over 20,000 participants there. The crypto space, or we call the digital asset space, is one small stage, subtract, called future stage. But on the other side of the world, if we take Hong Kong as example, where I came from, if you talk about crypto investment, probably they will put it in the past stage. That's what we discussed previous years.
So that's amount of money being put in equity investment. What about in the token? In the token, according to generated by Matrixport, which is our sister company, one of the unicorns in this space in crypto asset management, they expected, whether it is crypto winter or crypto summer, the traditional money are also investing through their familiarized channels, pumping in the money through hedge funds, family offices, and the money amounts to 2 to 3 trillion. So that's the amount of money that's been pumped into tokens, and 28 billion pumped into equity investment. However, if you look at it, it is still scratching the surface, because if you talk about fund managers in traditional banking, they don't dare to bring it up and saying, hey, I want to allocate a small amount of my portfolio into crypto. There is hard of risk management, high volatility, no fundamentals. How can they adjust their strategies to their LPs and saying, hey, I want to do that, or to their clients who are no knowledge of crypto? Taking a step back, so we think about the whole industry nowadays. I want to quote Ray Dalio. Think of it this way, they're both financial economy and the real economy. So the real economy, the supply and demand are driven by the amount of goods and services produced and the number of buyers who want them. So in the traditional model, it is supposed to be that capital being pumped into startups. And startups digest those capital, convert it into productivity, and then move back the capital to the financial economy. However, in crypto, it's slightly different, because in crypto, the barrier between financial economy and the real economy is kind of blurred. So because crypto is like finance native, when we're talking about crypto, the first thing we're talking about is investment. We're talking about primary market and secondary market. That's it. So that is what we're talking about today. That is the financial market and the real economy that we're talking about today, is by and large finance market. And what about the finance market? What did we develop in the 14 years since the born of Bitcoin? So the finance market that we're looking at now is 22,000 types of tokens in the market. 540, including centralized exchanges and decentralized exchanges. Around 60 billion daily volume being transactioned. If you look at the number initially, it's probably, like by itself, probably not bad. But if we compare it and benchmark with the traditional finance market, there is 70,000 listed companies globally. There is 140 stock exchanges. And the trading volume is approximately 550 billion daily. So what does it mean? It means for a traditional markets, institution, asset management, if they want to participate in the crypto space, digital asset space, that means they're highly concentrated in a couple of trading instruments. Among the 60 billion daily trading volume, even 40% or over that, 60% are generated by Bitcoin and Ethereum alone, if not more than that. So they are only concentrated in a few of instruments. And they need to allocate their fund in a lot more, 3 times more trading avenues. I'm not saying they're putting money in 500, but probably on average, they're going to allocate their money in a lot of exchanges. So that's not the game for them. It's not fun capital efficiency for trading for them. So a lot of those numbers, the point that I want to make is that the market is not ready for them to enter. Now comes to the crypto options market. In the traditional finance market, the options should be 20 times the trading volume of the spot market, spot equity market. However, in crypto, the amount is 2%. It was 2% in 2021. It was 2% in 2022. And everyone is expecting the number will grow significantly in 2023. So we're talking about why options should be the next big thing. Well, first of all, let me clarify that. It's not the space needs more institutional players. The space is growing regardless. The space is developing its DeFi, NFTs, it's developing its metaverse, GameFi, X2Earn space. We don't need institutions to actively trade to achieve that. However, it's very lucrative for them to participate. They're looking at retail users making 100 and 1,000 times gains, but they want to participate. And we all welcome more capital here. So they want to participate. On the other side, they will push the whole ecosystem to cater what they're used to. So the space will welcome more institutions to come in. And the regulation will come in. So if 2 weeks ago, if any of you goes to US, the atmosphere is completely different. It's kind of gloomy. But also it's a signal that the institutions are coming in. With institutions coming in, with regulations coming in, institutions will be more inclined to deploy their fund. And also, the market is volatile. I'm not telling you what's the age of myself, but I never experienced such a volatile market in my lifetime. The banks falling just a month ago, many of them. And during that time, the Bitcoin options trading volume reached its 22-month high. Because during the time of extreme market volatility, people are seeking crypto, but not only crypto, but crypto options trading as a safe haven, as to balance and hedge their risk. And also, of course, if you're aware, options trading is more easier to manage the risk with a combination of different puts and calls strategy, and it can protect your downside turn. Like last night, what happened if you look at the market. So this is about options, but we've been talking about it for many years already. The first options exchange Deribit has been set up since 2016. What has been stopping the market to grow even further? There is no mature OTC market because they are not going to trade on the book. The depth is just simply not there to cater their demand. And also the exchange infrastructure, if they change on the book, the exchange infrastructure is not mature enough because they don't need the latency we calculated at 10 millisecond or 20 millisecond. That's not acceptable. They use fixed. They minimize it into 1 millisecond. So that's what we want. And of course, for retail investors, including me, I need a simplified book market that can understand my profit and gains and losses easily. So that's actually one of the most important hurdles for retail investors to get into the options market. And of course, last but not least, the education. So all in all, like institutions are going to come into this space, and they want to come. Well, first the thing needs to solve is regulation, and then the second we're talking about is the infrastructure, people getting ready for this. And of course, the client of institutions are pushing them and say, hey, like you're managing my asset, I want to get exposed to crypto. So many factors coming along, we are going to see old money coming in together. So circling back to the first point, equity investment are already here, and token investment are already here, but the really, really big bulk of money of asset management and trading money is not there yet. And to solve all the problems that I just listed previously, it's probably going to take another 3 to 5 years. Thank you very much. Have a great day.